Hi, I'm Mike Metzger with Murphy Business Sales in Richmond, Virginia. I'm a certified business intermediary, and I help owners of well-established, profitable, privately held companies determine the value of their companies and go to market confidentially to find the right buyer at the best price. It's great to see America getting back to work, but we all know that 2020 has been incredibly difficult and disastrous for many small businesses. I'm regularly asked if 2020 is still a good time to try to sell my business, and even if you can sell the business. The answer is maybe. So I thought I'd take a few minutes today to talk to you about the four broad categories of post-COVID-19 companies, a little bit about the buyer market and what we're seeing out there, and then lastly, just touch upon financing and liquidity in this post-COVID environment. Let's talk a little bit about the four broad categories of small businesses in the post-COVID-19 environment. This is not scientific. These are merely the ways that I think of small businesses, and I think you'll find that they make sense. Category one is what I call the victims. These are the companies who simply won't survive this crisis. They may have already folded and closed their doors. Often, these companies were on the edge prior to the crisis, and this simply pushed them into the abyss. Sadly, they have very few options, which usually entail closing the doors, liquidating the assets, and trying to get off of any longer-term liabilities that they may have had in place. The second category of businesses is what I call the thrivers. There's a handful of companies that actually did very well during the crisis and in fact even grew their business. So think of companies in the cleaning and sanitation industry, protective equipment manufacturing, distributors, and some essential businesses, especially in the defense industry and so forth. Those companies have actually done quite well, and there's a very active market for those types of businesses. The third category of companies is what I like to call the steady eddies. These are the guys who may have seen a dip in sales and earnings during second quarter and maybe even into the third quarter, certainly as closures were mandated by the government. But they were able to recover very quickly and get right back on that trajectory to pre-crisis levels. In terms of valuations, what I'm hearing is most banks will simply look at that period of loss as an anomaly, and they won't really bake that into the longer-term valuation as long as the company can demonstrate that it's right back on that track to profitability and maintaining the business. The fourth and final categories of businesses in this post-COVID-19 environment are what I call the survivors. These are the companies that took a major hit during the crisis, again, probably due to forced closures and just general economic conditions, but they're slowly back on this path to recovery and will get back to normal at some point, but it may be in the more distant future, 12, 18 months. The tough part about this company is determining the valuation. It's safe to say that buyers are not going to pay for companies with decreased or depleted cash flows until they can see that those cash flows are returning to those pre-COVID-19 crisis levels. The banks will think of this the same way. So these companies, again, are perhaps sellable, but probably at a discount, and it's going to take some creative deal structure to get that deal done. My advice to owners of this type of business is if you have the time to wait another year or until you can recover the business back to pre-crisis levels, do so. It would be in your best interest. If you have to sell that business now for health reasons or other reasons, it can be done, but it will be tricky. What about buyers? Are there actually buyers out there looking for small businesses in this day and age, given all the uncertainty around us? You might be surprised to find that yes, indeed there are. Think of it this way. Many buyers have been displaced from their corporate jobs or from other industries, and there's certainly a flight to safety. They're looking for good, solid, performing businesses that ideally would be recession-proof or at least recession-resistant so that they can build their future going forward. I talk to these buyers every day. They've got cash and they're looking for those solid businesses. Just as an example, we have one listing right now that is relatively recession-proof, probably falls into that steady Eddie category. They had a little dip, but they're right back on track. In the course of 5 weeks, we had over 50 buyer inquiries into this company, and I was fortunate to be able to present 4 competing offers to the seller to sell his company. Finally, I'll touch just briefly on financing and liquidity in this post-COVID-19 environment. The good news is there's a number of incentives out there for acquisition loans, SBA loans specifically. For instance, the SBA Debt Relief Act provides for 6 months of principal and interest payments on any existing SBA loan or any loan originated before September 27th of 2020. That's as of this recording. That may be extended. What that means is that the government will make 6 months of payments to your bank on your behalf. That's free money for new and existing SBA loans. Quite an incentive. They're also looking at some additional incentives to reduce the costs of SBA acquisition loans, something to just keep in mind. Now, that's not to say that getting an SBA loan is going to be easy. As I speak with my bankers, my banker colleagues, they tell me that loans will be and deals will be scrutinized to a degree that we haven't seen in the past, and rightfully so. They want to make sure that the business is well positioned to perform and that the buyer will succeed and be able to pay back that loan to the bank. But just know that it could be a little bit painful getting an SBA loan. We're going to also have to look at more creative financing structures. For some of those businesses that perhaps don't have, the banks don't have an appetite to finance, we may be looking at seller financing, we may be looking at extended earnouts, and again, different creative financing vehicles. So I encourage my sellers, especially those who are in maybe that steady Eddie category or the survivor category, be open-minded and think about, as you think about financing going forward. Well, thanks for your time, and I hope you found this information helpful. If you are a small business owner who's contemplating your options in 2020, know that those companies with solid performance that are back to pre-crisis levels are likely to be well received in the marketplace, and there is financing available for those types of businesses. If your company is on that slower recovery curve and you expect 12 or 18 months until you get back to that pre-crisis level, it may make sense to wait to try to sell your company if you have the time. Either way, my advice would be to seek professional help when selling your company, and I'm happy to have a confidential, complimentary conversation with you about your options in 2020. Have a safe and healthy rest of the year, and I wish you all the best.